Stephen, let me start with you because you put out a piece on this. Is it going to work? And what is it meant to do?
No, but it's going to work only temporarily. So if you look at what happened in April, they did the same. The currency stabilized for a little bit, but then after that, just because the dollar just gets stronger, China's macro data is weakening, and then we saw a weaker yuan after that. This time, we expect the same, of course. As long as China's partial lockdown continues, data continues to look weak, the yuan is just going to drop further against the dollar, especially closer to the 7 handle that we see now.
Okay, now we talk about the 7 handle. I'm not sure, do we talk about that because it's a nice round number? Like, what are the people that you talk to are saying? Is that an important number? Are we going to go weaker from here?
It's definitely just a psychological milestone. In fact, the last time it actually touched 7 was in 2019, which was post the U.S.-China trade war, and when things were ratcheting up between them. And then it happened again in 2020 at the height of the pandemic. What's quite different, I think this is what Stephen was saying about the fundamentals this time, is that the spot rate is moving on the weak macro fundamentals. And what the PBOC is trying to do when it's leaning against the declines with the daily fixings and with cutting the FX RRR, it's mostly trying to eliminate herd behavior. It's trying to kind of dampen the speculative one-way bets.
Well, let's talk about that, because when we talk about fundamentals, then, I mean, we know it's a weakening economy. I look at exports, though, and that's due, I think, this week. I think it's 90 billion, if I'm not mistaken, was the latest read, or a trade surplus. That doesn't seem like, if I put that together with a currency that many people say is undervalued, or overvalued, rather.
Yeah, as you said, trade surplus, it's at a record high recently, and it's still very strong. Export is still very strong. I mean, it hasn't really changed since last year. The thing is that, like, the rest of the economy is weakening, so that's the problem. Now, if we don't have this very strong export or trade, the yuan will be beyond 7 already. So we're already talking about the support from exports that's keeping yuan below 7. Now, the problem is with COVID, with all the restrictions, like, we're not going to say whether it's right or wrong, but then it's hurting the economy. Like, even for places like when we talk about economy in, say, the Taiwanese economy, a lot of factories in China, so that's impacting Taiwan as well, and also a lot of the other Asian economies as a whole. So China's own problem will actually impact Asia and the world economy. And on top of that, we're talking about slowing aggregate demand globally, US, Europe, you can name it. And that's going to fit into weaker exports going forward. So even this really strong tailwind for Chinese currency, it's going to weaken as well. So there are just a lot of headwinds for the Chinese currency right now.
Right, and does that weaken the broader Asian FX complex? Like, what's that conversation between causality, correlation, and are we overthinking this?
You're kind of overthinking it because it's basically a dollar story right now, right? But I think what Stephen Chiu was saying was actually really kind of the key point. There's two things that you should note. The Asian currencies like Korean won, Taiwan dollar, Thai baht, they're definitely going to be linked to what happens with the Chinese currency, right? But at the same time, if you look at the Chinese currency from like a trade-weighted valuation, it actually hasn't even moved that much this week, even though yesterday I think we saw the offshore yuan hit like a 2-year low, right? So the policymakers look at the yuan from a holistic point of view. They're not just looking at it from the dollar-yuan exchange rate. They're looking at it from trade-weighted valuation. And from that angle, like, the yuan is actually quite stable. But speaking about emerging markets, I do think there is a bit of like a debate that's emerging right now among whether or not emerging markets have fully decoupled from China. I think about a year ago that correlation was very, very high with China. But now I think some people are saying, you know, since the Asian financial crisis, Asian emerging market economies, they've really bolstered their balances, their reserves. They've done a lot to kind of be better prepared for this cycle and this cycle of Fed tightening. So, in fact, I think some emerging markets are a little bit more cushioned this time from the yuan weakness than others. Yeah,
I mean, the likes of the Thai baht, for example, and that's obviously a tourism story. So you mentioned the basket. Stephen, let me just end on you. So the basket's what, 101? Where do you see that going?
Actually, we've been keeping track of the value of the basket, and right now our number is 102.50. So right now we're just slightly below fair value, and that could also be one reason. I know, like, the basket is pretty much stable this year, but it's still weakening quite fast over the last few weeks. So that's probably also one of the trigger. That's why PBOC start throwing out measures to stabilize the yuan zhao.